I've been investing for 5 or 6 years now, and I always show my investment portfolio balances in these videos, but I never talk about exactly how much money I've made from the stock market since I started investing. Obviously, when we're talking about investment portfolio balances, it's money that I've made in the stock market, but then also money that I've been contributing into my investment portfolio over the years. So when I just show my overall investment portfolio number, it doesn't do a really great job of showing, is investing worth it? Have I been making any money in the stock market over the last couple of years, and all of that. So that's what I want to talk about in today's video. It's Sunday, we're in our pajamas. I don't plan on leaving my pajamas today. So what's better than a cozy Sunday talking about investing and making money in the stock market? So let's get into it. You can skip ahead to this time in the video if you're already investing and you know why you should be investing and you really just want to see the numbers and how much money I made. But before I get into all of that, I want to talk about how I started investing, how I learned about investing, and why I'm so passionate about it today and try to invest as much money as possible in my 20s. I'm 25, I'll be 26 in a few months, and I've been investing since the age of 19. So I've been investing for like 5 or 6 or even 7, I guess, years now. And I definitely did not grow up with like parents that taught me about investing, parents that invested money for me. I didn't get an investment portfolio handed to me when I was 18. I was in college at the time and I knew nothing about investing. I honestly wasn't even really that good with my money back in college. But when I was 19, I started dating this guy who was already out of college and he was working as a financial advisor at the time. I obviously knew that he was really good with his money because he was a financial advisor, but a couple months into the relationship, we started having more open and honest conversations about money. And this man had, and probably still has, really big financial goals. I remember when I was about 19, he told me that his goal was to retire at 40. I had no idea what he was talking about. I didn't know anyone that retired any earlier than the age of like 65 or 70. My parents are in their mid 60s and they're still trying to figure out how to retire, but he was very adamant that he was going to be able to retire at 40. And a lot of that was because he was investing super young. He wanted to get into real estate investing, all of those things. That was the first time of my life that I really put any thought into retirement at all. I didn't even have my first full-time job yet, let alone thinking about quitting that full-time job. But that was also the first time in my life that I thought about retirement as an age, not a number. Essentially, the whole idea around retirement is that your lifestyle today costs money. You work to fund your lifestyle, and when you retire, you need money that's going to be coming in every single month to replace your active income to fund that lifestyle. So if you're spending $5,000 a month, if you stop working, you need $5,000 a month. So in order to retire and stop working, you need your active income to be replaced by some other type of income. And where does that money come from? It comes from your investments. My ex-boyfriend started talking to me about money and investing. I ended up reading the book Rich Dad Poor Dad. In a nutshell, the big kind of takeaway for me from this book was that regular people use their active income to fund their lifestyle. Rich people use their active income to buy assets that give them the money to fund their lifestyle. Once your assets can pay you enough money every single month to replace your active income, that's when you get to retire, no matter what age that is. If you get to that point when you're 40, then you can retire at 40 and your investments can pay you enough money to fund your lifestyle. If you get to 65 and you still don't have enough money coming in every single month from your asset, then you're not going to be able to retire. So basically, me learning this at 19, the gigantic takeaway for me was, wow, I need to invest as much money as possible as early as possible in order to buy back more time in my life, which that's the whole goal of anything that I do related to my money. It's freedom, flexibility, working because you want to, not because you have to. Me learning this at 19 was super inspiring because I was like, wow, I have the opportunity to buy back a significant portion of my life if I could be smart with my money early on. So I started to take investing super seriously at the age of 19, and now here I am at 25, almost 26, and my investment portfolio is right around $200,000. And in this video, I'm going to be breaking down what accounts I use, what I actually invest into inside of those accounts, and then how much money I've actually made from the stock market as opposed to how much money I've contributed into my investment account to see, is it worth it to be investing your money in your 20s? First, let's talk about the accounts that make up my overall investment portfolio. Like I said, my total portfolio balance is around $200,000 right now, but there's a couple different accounts that I invest into that make up that entire portfolio. The very first account that I started investing in when I was 19 was a Roth IRA. I started here because since I was still in college, I didn't have access to a 401k because I didn't have a full-time job yet. And yes, if you have a 401k through your employer, you are already investing. I feel like I hear that a lot, that people are like afraid of the stock stock market and they don't want to start investing, but they do have a 401k that they're contributing to every single month. And like, if you have a 401k, your money is invested into the stock market and you are investing. But in a nutshell, the Roth IRA is the account that most people recommend getting started with if you want to start investing. It is a tax advantaged account, which means that the government is basically incentivizing you to invest for retirement by giving you a tax advantage inside of that account. The big reason why I felt comfortable starting with a Roth IRA account at the age of 19 is because even though it is a retirement account and you're kind of like locking your money up until retirement, inside of the Roth IRA, you always have access to your contributions and pulling those out without a penalty. So it's something like your 401k with your employer. If you want to withdraw any of the money inside of your 401k before the age of like 59 and a half or whatever it is, you're gonna pay a 10% penalty on that, which is obviously not ideal. But with a Roth IRA account, anything that you physically contribute, you always have access to taking that money out. So let's say you invested $500 into your Roth IRA and that money grew from $500 to $600. You can always pull out that $500 of the money that you invested. You just can't pull out that extra $100 of investment gains without a penalty. So that made me feel really comfortable getting started because I was still a little bit like skeptical about the whole investment thing when I first started investing. So I was like, this way I know I can at least pull out the money that I personally invested if I need to put it onto my student loans or into a savings account for a home down payment or something like that. Obviously the goal is not to pull out your money, it's to leave it in there for a very long period of time, but it still made me feel comfortable when I was just getting started. The second type of account that I started investing into was a 401k. When I graduated from college, I got my first full-time job and my company offered a 401k and they had a pretty good match. I think it was 8%. So I made sure to contribute to my 401k up to the employer match. And then a couple years after I graduated, I actually quit my full-time job to become fully self-employed. So with that, I no longer had access to continue to contribute to my 401k account, but instead I opened what's called a solo 401k, which is essentially the exact same thing as a 401k, but it's the self-employed version. So it works basically the same, except I am my own employer. So I'm contributing to that account now instead of the 401k. And then the third type of account that I'm currently investing into is a brokerage account. This is basically a fancy term for just a regular investment account. It's not a retirement account. There's no tax advantages to it. It's called a taxable brokerage account, basically meaning that you have to pay taxes on the gains that you get inside of the account. So like I said, when you're investing into the retirement accounts like the Roth IRA, the 401k, all of that, you get some tax advantages to that because the government wants to incentivize you to be able to fund your own retirement one day. But with the brokerage account, there's no tax advantages, but with that, there's also way less rules on how much you contribute, when you can pull that money out, all of that. After college, once I got to a point where I was maxing out my Roth IRA every month, so I was doing, I think at the time, like $500 a month was maxing out the account. And then I was also investing in my 401k up to the employer match. I wanted to start diversifying my investment portfolio outside of just retirement accounts, and I wanted to start investing into a brokerage account. The big reason for this is that I knew that I was investing enough into my retirement accounts to be comfortable in retirement one day. And I wanted to take my investments a step further and be like, okay, how can I invest my money so that I can truly build that freedom and flexibility into my life prior to retirement? So I started investing into my brokerage account alongside of my retirement accounts so that one day in my 30s or 40s, I have money sitting there. If I want to put my kids through college, we want to buy our dream home, I want to take a year off to travel. I don't know exactly what the money will be used for, but I do know that I will want that big cushion of money to build that freedom and flexibility into my life as an adult. Now into what I actually invest into inside of all of these different investment accounts, because it is very important to remember here that you can't just dump money into investment accounts and think that you're investing. If you do that, your money is just going to be sitting there in cash and it's not going to make you any money. But once you deposit the money into your investment accounts, you have to actually purchase an asset. So you have to purchase like a stock or a fund. So here are these stock market assets that I'm purchasing inside of my investment portfolio. Inside of all of my investment accounts, I purchase what are called exchange traded funds. ETF is the acronym that you might hear, but essentially the important word here is fund. So basically, if you want to invest in the stock market, you have two different options. You can buy an individual stock or you can purchase a basket of stocks, which is called a fund. There's a couple different types of funds like ETF, index fund, mutual fund. They're like similar but different, but again, the important word here is fund. So instead of buying one individual stock, you're buying one fund, and inside of that fund, there's a gigantic basket of stocks for whatever fund you purchase. Inside of all of my investment accounts, I primarily purchase 3 funds. I keep it super simple. I purchase an S&P 500 ETF, a total US stock market ETF, and a total world stock market ETF. To break that down super simply, so the first one being the S&P 500 ETF, I'm purchasing one fund, and inside of that fund are the 500 largest publicly traded companies in the US. The second one, the total US stock market ETF, I'm purchasing one fund, and inside of that fund are all of the US companies inside of the US stock market. And then the total world fund is the same, except it's the global economy, not the US economy. So just by purchasing 3 funds, I get access to all of the biggest companies in the US. The total US stock market one will include a lot of those bigger companies, but it also includes a lot of the smaller companies as well. And then the total world fund is the international markets. So 3 funds, I feel very diversified within the stock market. Now for the fun stuff, let's talk about exactly how much money I have made in my investment portfolio since I started investing. I actually don't look at this super frequently, so to prep for this video, I had to go into all of my investment accounts and kind of like look at the portfolio performance and take screenshots and all of that. We're gonna start with my Roth IRA because again, that was the very first investment account that I ever opened. I have my Roth IRA with Charles Schwab. They used to be TD Ameritrade, and that's when I opened the account, but Charles Schwab bought out TD Ameritrade, so now I use Schwab. And if I'm being completely honest, this isn't like the most user-friendly platform ever. I'm decently financially literate, and it still took me a decent amount of time to figure out how much money I made. Since my money used to be at TD Ameritrade until they bought it, I only have data going back to September of 2023 for some reason, but between September of 2023 to January of 2025, I've made $7,394 inside of my Roth IRA. Now, I actually haven't contributed to my Roth IRA since before September of 2023. The reason for that is because there is an income limit to contribute to the Roth IRA. I believe this year it's around like $150,000, and I do make over that, so I don't qualify to continue to contribute to my Roth IRA anymore. So as you can see here where it says net contributions this period, I haven't contributed anything. So the investment change of $7,394, that is between the value of the funds increasing and then also any dividends that those funds paid out for. In all of my investment accounts, I have it set to reinvest my dividends, which is super important. In 2.5 years, I have made roughly $7,000 off of roughly $23,000. You can see here under rate of return that I had a cumulative rate of return of 32% and an annualized return of almost 23%. So over 20% annualized returns, I would say that's pretty good. Now going to my brokerage account, because my brokerage account is also with Charles Schwab. Same thing, it used to be at TD Ameritrade, now it's at Charles Schwab. I put in the same time frame because that's the furthest back it would let me go, September of 2023 up until January of 2025. In this account, during this time, I have contributed $26,000. Prior to September of 2023, I had $18,000 in my brokerage account. So as you can see, I really ramped up my brokerage account investing during this time period, where with the Roth IRA, I stopped contributing to that account, but excluding the amount of money that I've physically put into my brokerage account, during this time, I have made roughly $7,600. That rate of return looks like 23% cumulatively and 17% annualized. The next one is my solo 401k, and this is the account that I'm most heavily contributing to at this point. I opened this account in December of 2023, so roughly like 13 months ago, and my account value is roughly $75,000, with my returns being close to $6,000, which means I've contributed close to like $69,000 between the calendar year 2023 and calendar year 2024. Since this is my solo 401k, again, like I'm the employer, I can contribute to this account on both the employee side and the employer side. So basically I've been maxing it out on the employee side up to $23,000 a year, and then I've been doing some contributions on the employer side as well to get to this number. Then last is my 401k from my old employer. This account has $31,680 in it, and like I said, since I'm not employed there anymore, I can no longer contribute to this account, but obviously the investments are still there. They're still invested into the stock market. They're still growing. I do need to roll this account over into either my solo 401k or an IRA or something like that, but I honestly just haven't gotten around to it yet. But as you can see, my investment returns here are $9,117 with a rate of return of 15.7%. However, I will say here, since this is a 401k and it's from my old employer and they had an employer match, the deposits here, so the money that I've physically contributed into the account is not all my money. My employer was doing some of that work for me through their employer match, so the actual rate of return here is significantly higher when you're calculating that you didn't actually put in that money your employer did. So in conclusion, to sum all of this up and see exactly how much money I have made in the stock market to date, I asked ChatGPT. My total portfolio value right now is $188,000. My total investment gains are $30,149. When I asked it to calculate the rate of return for that investment portfolio, it came to 18.98%. 8%. Total rate of return for your entire portfolio is approximately 18.98%. To answer the question of is investing worth it, it's important to note that I definitely don't expect to be making roughly like 20% year over year in the stock market. The stock market naturally has like good years and bad years. Some years you might pull up your account every day and the numbers are red, so you're losing a little bit of money every day. But when you kind of zoom out and realize, okay, what does the historical data tell us? When we're factoring in the good years and the bad years, what should I expect? Historically, the stock market performs on average around 10% annually. We're comparing that with our other options, which are basically putting our money into a high yield savings account, buying a CD, buying bonds, all of those things, which like there's a time and a place for all of that, but those things are still not substitutes for investing your money into the stock market. In the whole question of is investing in the stock market worth it, especially for people in their 20s, I think it's important to talk about the concept of compound interest really quickly, which essentially just means that the money you're making on your investments compounds really quickly because your gains are also making gains. To explain this super simply, so let's say your stock portfolio returns on average 10% per year. So you're making 10% per year in the stock market. That means if you invested $100 next year, your investment portfolio should be at $110. But then the following year, your $110 is now returning 10%. So the following year, your stock portfolio would be at $121, making you $11 that year. The following year, if you earn 10%, instead of it being at 121, you're going to be at 133. You can see how every single year that same 10% is making you more money. Your gains are also making gains, so it's compounding very quickly. To better explain this, I pulled up a compound interest calculator so that you can see what this graph looks like. This is assuming that you're investing $500 a month over the course of 30 years, and you can kind of see how that graph, there gets to be a bigger and bigger gap between the red line and the green line the longer you keep investing. So in conclusion, yes, in my opinion, it is absolutely worth it to be investing your money in the stock market. Doing it young will make it exponentially easier for you to build a substantial amount of wealth because you have a lot more time for your money to sit there and compound. So let me know in the comments what else you want to know about investing, and thanks for following along to my channel.